Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden within company filings. Today we are diving into BioCardia Incorporated's latest update to see if they are staying on track or running out of time to keep their spot on the Nasdaq. So it looks like BioCardia Incorporated has been having a tough time meeting one of the basic requirements to stay listed on the Nasdaq Stock Exchange. Remember that rule that says companies need to have at least $2.5 million in stockholder equity? Well, BioCardia has been struggling to hit that mark. They got a notice back in April saying they were below it. Now, typically when a company receives such a notice, they get a specific time frame to come up with a plan to fix the problem. In this case, BioCardia was supposed to present their plan by May 16. And just like they said they would, they submitted their plan on May 15. The good news is that the Nasdaq staff reviewed their plan and gave them an extension. They now have until the 29th of September to get back in compliance with that stockholder equity rule. To get back on track, the company has been busy raising money. Back in April, they sold over 400,000 shares of their common stock, along with warrants, which are like options to buy more stock. This private placement brought in about $719,000 after all the fees and expenses. These warrants have a story attached to them too. They are exercisable until either April 2030 or until their heart therapy system gets approval from the Japanese authorities. Then, at the end of June, they did it again. They sold another batch of shares and warrants. This time it was over 274,000 shares. This move brought in about $529,000. Just like before, these warrants are also tied to the approval of their heart therapy system in Japan. But the biggest move happened in September. They successfully sold nearly 5 million shares of their common stock, with accompanying warrants in a public offering. This brought in about $5.1 million after accounting for fees and other costs. This is a significant chunk of change and seems to be the key to their recent progress. On top of that, they also utilized their at-the-market offering agreement. From April up to this report date, they sold over 446,000 shares at an average price of $2.55 per S-share. This at-the-market selling brought in another $1 million. So, looking at all these fundraising efforts, BioCardia believes they have now met the minimum stockholder equity requirement of $2.5 million. They think their stockholder equity is now above that crucial threshold. However, Nasdaq will keep a close eye on this. If, by the time of their next regular report, they are not keeping up with this rule, they could still be delisted. It is good they raised money, but they need to show they can maintain it. Now, the company does include a forward-looking statements section. This is pretty standard stuff in these filings. It basically means they are talking about what they expect to happen in the future, but these are just their current thoughts and not guarantees. Things like their ability to stay listed on the Nasdaq are in this category. They remind us that actual results could be very different due to various risks and uncertainties, which they detail in other more comprehensive reports. They are not promising to update these predictions if things change. Looking at the big picture here, BioCardia has been in a bit of a tight spot regarding its Nasdaq listing. The need to maintain a certain level of stockholder equity is a fundamental requirement for public companies, and they were at risk. However, the company has been very active in raising capital through multiple private placements and a public offering. The September offering seems to be the most impactful, bringing in a substantial amount of cash that they believe will pull them out of the woods, at least for now. The fact that they've managed to secure these funds, even with warrants tied to their product's regulatory approvals, shows some resilience and a belief from investors in their potential. The key challenge for BioCardia moving forward will be to not just meet the minimum equity requirement, but to sustain it. The ongoing approval of their CardiAMP cell therapy system in Japan is a critical factor for the warrants and represents a major milestone for the company's future business. If that approval doesn't come through, or if their financial performance falters, they could find themselves back in hot water with Nasdaq. Right now, it looks like they've bought themselves some breathing room, but the long-term financial health and operational success of their therapy will ultimately determine their staying power on the stock market. It is a bit of a nail-biter, but they've taken the necessary steps to try and secure their listing. Alright, that is our breakdown of BioCardia's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think they'll manage to stay on the Nasdaq? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description where we discuss these filings further. Thanks for watching. See you next time.